You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elkanan. We're joined by Gary Kaltbaum. He's the president of Kaltbaum Capital Management. Gary is a registered investment advisor with more than 30 years of experience in the markets. Gary, thanks for joining us. How are you doing on this Tuesday morning?
I'm doing great, and thanks for having me. Really appreciate it.
Oh, absolutely. It's always a pleasure to have you on the show. Well, Alcoa unofficially kicked off our earnings season last week. What are your expectations for some of these earnings reports we're getting in?
I think we're going to get what I consider to be blah earnings, BLAH. I suspect that earnings and sales growth has really slowed down. I think with the stronger dollar probably hurt multinationals. But keep in mind, I think the markets probably factored a lot of that in already, and that's going to be key. If we start to see some real serious warnings, that'll be another story. But I'm expecting somewhat of a non-event this earnings season.
Do you think that's going to contribute to some of the economic indicators that the Federal Reserve is looking for to see if they can, successfully include a rate hike in this year?
Well, first off, here's something very important. I think a lot of people are making this such a big deal that if the Fed does raise rates from 0% to 0.25%, to be clear, 0.25% Fed funds is basically 0%. So it really is much ado about nothing. It's more or less perception, but it really does not change the playing field in any way, shape, or form. We still would have massive easy monetary policy, not only here but around the globe. You have Europe and Japan printing to the tune of about $1 trillion a year each place, and you still have the UK and other areas still printing. And I think there's about $6 trillion of bonds out there that are trading with negative rates. So it would, to me, it mean absolutely nothing. Maybe the markets take it a different way, but I think it's 0 or quarter is absolutely meaningless. And again, easy monetary policy years ago used to be, oh, we're at 4%, we'll drop to 3.75, we'll drop to 3.5. We've never ever seen the likes of what we are seeing now, and I think we're going to be here for a very long time. And maybe somebody's going to have a fit if they raise a quarter point. I don't think it's for me. It's absolutely nothing. And if we have any dislocations in markets, I think they don't, and we'll see in 2016.
Hey, that's a great point, Gary. I'm so glad you brought that up and kind of laid out what the realistic expectations are for a quarter point rise in rates. It's the world's not going to end. It's not going to be that much different. So it's really kind of good to set the expectations in more
Yeah,
of a
look,
realistic
a
tone.
0.25% Fed funds is still ridiculous,
Right.
over the top, never seen before interest rates. So I think I don't think it's a sweat. Now, if they start raising a quarter point every month or two, that changes the playing field. But that will definitely not happen.
So you mentioned also European monetary leaders as well as they're doing quantitative easing. We can't not talk about what's going on in Greece. And as we were talking before we got live on the show, you think Greece will get out of the news once all this settles down until it bubbles up again in a couple of years. And that's kind of the point I've been taking is like, look, this is like the third time we're bailing out Greece. Who's to say this isn't just going to happen all over again?
Yeah, it's the third time in 50 years, but Greece has a history of this. They're very good at spending money they don't have, and eventually somebody comes to bail them out. In this case, the best news that comes out of this deal, if the deal gets done, is the fact Greece actually will have to put up $50 billion in assets against any more bad behavior by them, which means not paying back the money. But this, again, is an even bigger credit card to pay for some other credit cards that are still out there, and nothing has changed. I wonder if there's even going to be any oversight on what Greece does. Time will tell. And the other part of the equation is I don't think the people are going to go for this, and I think there may be some sort of an uprising. It's everybody's fault. It's for the takers, it's for the givers, it's for the lenders. They are all a party to this problem here. This could have been fixed a few years ago when the numbers were more manageable. Now it really can't be fixed because the numbers aren't manageable. And if you end up letting Greece go, we're talking massive write-offs playoffs, which means that Portugal, which by the way has a higher debt to GDP than Greece, they'll start talking about doing something. Spain, Italy, and then the dominoes can start falling over. That's where real problems happen. I do not think we're there yet, and I suspect the deal gets done, and we'll see in a year or two when they have when the problems bubble up again, because nothing will ever change.
What about China? It's like I feel like we've been so obsessed with talking about Greece. I mean, and more so in the past week. I've definitely seen people starting to talk about the Chinese stock market, but people are saying there's a bubble. Chinese government
Yeah.
has come in and put all of these regulations to try and sort of handle what's going on. What's your take on the situation?
Yeah, I don't even call it a Chinese stock market anymore. It's a Chinese government store. They are controlling
Wow.
it. Look, I was thinking to myself, and I mentioned on my radio show the other day, imagine this. A government says that if you short sale, we're going to arrest you. A government that says do not sell. A government that says you can't sell. And a government that says, hey, by the way, you can use your real estate that you own to go on margin to buy stocks in order to goose stocks. To me, it is just creating something. I don't know when it happens. Maybe it happens next week, maybe in a year, maybe in 5 years. But this has the makings of the biggest blow up in history, because when all gets said and done, valuations will matter, and eventually the bubble goes so far to where it just plain old pops. And think 1999. I still remember making fun of companies that had $3 billion market caps with no sales, and then they would double. And they'd be $6 billion, and I'm like, you're nuts to buy them. And then they'd go to a $9 billion market cap, and I'm like, what's going on here? Well, eventually they all went to zero. So there is an eventuality of what happens here. We're not dealing with a real world right now. We're dealing with a controlling factor, and I just hope I'm short when this whole thing does blow up. Maybe we're in the midst of it now, or maybe they can keep it going for a while. I'm not sure just yet, but to me, it's an absolute farce.
So you think we'll see a pop in the Chinese stock market similar to the dot-com bubble?
Oh, most definitely. And let me just say this. I think there is a small percentage that it's actually in the midst of happening right now, in that what we just saw on the downside was the initial popping of the bubble. Now, if you remember back in 99, we really started popping in some areas in early 2000, then March 2000, but really it took about 6 months until September Labor Day before things really started to, hit the fan. So I think maybe what we just saw is the start, and then we'll go through some sort of process of just getting smoked to the downside. I'm not sure just yet. Timing, there's no way of knowing, but I'm watching it very closely, because if in fact it does pop, there's going to be some big money to make, as there's going to be no buyers left for anything. And that's the problem with trying to control markets. Eventually, they bite back, and once everybody's in, there's nobody left to buy except the government. I'm not so sure they're going to be able to do it forever.
What happens on a global scale when this bubble pops? I mean, when you think about Greece, it's a relatively small country. It's like
Yeah.
if we were thinking about like Connecticut in terms of the United States, but China is enormous and its
Yeah.
GDP is significantly bigger than Greece. What happens on a global scale when this stock market bubble does pop?
Well, I've been saying all along, Greece by itself is not a big deal, but the potential domino effect is a big deal, because without a doubt, the world is laden with tons of debt and tons of leverage, a lot more than we even had in '08, so really nobody's learned the lesson. As far as China, it's just much bigger. One would hope it would be isolated to just being over there, but we are a global world now. Everything is intertwined, and if China drops 30, 40% from here, it's going to affect markets and economies around the globe. Just remember, it would really destroy their economy, as the average Chinese person is getting all into the markets, and that will really affect their economy, will affect exports and imports, the whole works, and then you can really start to get a domino effect. And that's why I think China is doing what they're doing. I think they know they have to keep prices up. That's my take at this point. I said it on TV yesterday. China has to keep prices up, or else. And back in '08, in all my reports, once things started to roll over, or '07, '08, I used the line in every report: nothing bad ever happens as long as the markets are cooperating, as long as the markets are doing fine. But when markets start biting back and not doing well, that's when things get exposed. And I always said back in '08, Lehman Brothers and Merrill Lynch and Bear Stearns, they didn't really go out of business. The markets put them out of business by sending their stocks down 99 to 95%. And in the case of China, keeping fingers crossed that doesn't happen, because then you'll have a little bit of a domino effect, and that's not going to be fun.
What about some of these Chinese ADRs that are traded over here? You're thinking about Alibaba, things like Baidu. How should investors be approaching those?
How about this for an answer? I don't know.
Okay.
Uh,
It's
I, I'd
honest. I
love to
like it.
give you a great answer on that, but if you go look at some of the Chinese ADRs in the last couple of weeks, let me give you net T's goes from 145 to 118 in 2 days, back to 141 in 2 days. That's the type of action you get when you get interference from a government, and I think it's just too tough to play. It's almost like guess the gap. You don't know if the next day it's
Right.
going to be down 8% or up 8%. So I would just tread cautiously on these things until a major trend's in place. And right now, you have a big down move. You have a flopping and chopping going on right now. I'd like to see things tighten up, and then I'll be able to get the next direction. But right now, it's just too much wide and loose trading and too much of a guessing game for me to put my thumb on it and even try to even guess where the next move is coming from. Much too tough this second.
Let's switch focus to a little closer to home. We are on the line with Gary Kaltbaum. He is the president of Kaltbaum Capital Management. Gary, what are you seeing in U.S. markets since we've been talking about all of this global and macro action?
Well, under the noise of the recent, what I would call slight weakness, let me tell you the greatest news, and that is, in spite of Greece, in spite of China, in spite of slowing earnings and sales here, our major indices, notwithstanding the transports, which were down about 10, but the major indices, the Dow, S&P, and all that, at the most have been down 5%. That is nothing. That is an absolute tiptoe through the tulips that I'm thinking that maybe sellers may start to get fed up and realize, hey, wait, we can't send this thing down. If they go away and buyers show up, maybe we can finally break out of this range. And keep in mind, the NYSE has been in a range bound for about 13 months now, and the other major indices for multi-months here. So if we can break out, that's good news. It would broaden the market a little bit. But beware, I call this right now a 40-60 market. 60% of the market is not participating. 60% of the market's in a form of a bearish market led by the commodities, which we've been negative on for over a year now. But that said, I love the action in the drugstore chains, which are now breaking out, the cruise lines, which are now breaking out, a select group of what I call growth glamour names. In the past week, you have Amazon breaking out, Facebook breaking out, Ulta Salon breaking out. With talk breakouts, they've been range bound, and they start moving out of that range to the upside. O'Reilly Automotive, this is the type of thing I love seeing. You have continuation moves in names like Disney and Starbucks and Nike. So there is plenty of meat on the bone on the upside. You just got to be very, very selective and just stay out of the bad stuff. And mainly, the commodity areas remain gross except for the oil refiners. Things like Tesoro and Marathon Petroleum and Valero look excellent at this point. So I do think there's plenty of stuff on the upside here.
You mentioned a lot of stocks there. Let's focus on specific sectors. Sector-wise, what are you kind of looking at as an emerging focus right now for investors?
Well, I think airlines are starting to emerge again, but not all of them. I love the action in Alaska Air, JetBlue, Allegiant Travel, and a Ryanair, which is out of it's a discount airline in Ireland. That they're emerging. I'm starting to see a reemergence in the discount retailers. Start looking at Ross Stores, Dollar Tree, TJX. Looks like they're starting to get a pretty decent bid here and turning the corner. So I'm looking at that also. So the good news is, regardless that we're range bound in the market averages, regardless of China and all that, I am finding places that are acting darn well. And by the way, to mention one other place, Time Warner, some of the media names are breaking out of range here. So this is good news, and I would be concentrating on these places that are breaking out before the markets do, and hopefully the major indices follow.
What about cybersecurity? Is that on your radar at all? I mean, we had, the government's HR, the Office of Personnel Management, had an enormous security breach, and tons of
Yeah.
information from those employees got hacked. When the NICE got halted last week, obviously they're saying it was a technical issue and not a hack, but it brought up a lot of fears of cybersecurity issues. What are you looking at in that sector?
Well, you can expect more hacking going on. I don't think this is the beginning of it. I think it's going to go on for a very long time. But right now, I don't have much in that group. The one name that stands out that's been a big leader, which, by the way, I have not owned, and I'm very depressed, is Palo Alto Networks, which is symbol PANW. Very strong earnings and revenues, but has had multiple moves over the last year, and I'm worried that it's a little bit of a late stage, so I'm not in the mood for it right now. But other names that were acting well seem to have lost their leadership. Something like a CyberArk, which is CYBR, had a pretty good move, but now is starting to break down. So I'm not in
Yeah.
the camp of owning the cybersecurity the second, but if they start to show being defended on the downside and they start to show better action, I'll jump all over them, because some of them have very strong earnings and revenue growth. But I think right now they're on their heels a little bit.
We've been on the line with Gary Kaltbaum. He is the president of Kaltbaum Capital Management, talking macro, talking U.S., talking sectors, individual equities. Gary, thank you so much for joining us this morning. We will absolutely have to have you back on the show soon.
My pleasure. I appreciate the time, and thank you very much.